newsfeed. Well, on Sunday night, President Cyril Ramaphosa confirmed that there's now going to be some tax relief for businesses affected by the violence in KwaZulu-Natal and Gauteng. At the same time, there's some relief for alcohol producers. You might remember that alcohol producers pay tax at the point of production. In other words, they have to pay tax on alcohol before they sell it. They haven't been able to sell it, of course, during a month of level 4 of the lockdown. The Commissioner at SARS is Edward Kieswetter. Mr. Commissioner, good evening to you and thank you for your time. How would you describe the tax relief that's been given to companies?
Thank you, Stephen. So first of all, the tax relief is not only confined to companies or businesses within those two provinces. It is for all qualifying businesses. And specifically to your question, I think the relief measures by government is a display of the understanding that there is absolutely a real need out there that unless there is some measure of relief, many of these businesses will not survive. But more importantly, if they close for any length of time, then it's jobs on the line. And in South Africa, unemployment is already such an endemic disease in our country that every job lost affects another 5 people or so. And so the real intent behind these measures is about ensuring that those jobs are saved and that we do not end up putting more people on the road, on the street. We know currently our unemployment levels already around about 32.5%.
So is the substantial relief? I mean, there are obviously different things that you're doing for different types of businesses, but it seems quite substantial.
Stephen, of course, there will always be too little money for the need. And so government has to live within its means, but for the affected people, and I don't want to venture outside of the tax relief measures, but just important to note that even the 350 Rand a month, which many people, including you and I who are more privileged, would think it's a meal at a restaurant, it's maybe a book from your favorite bookstore. That's for us, but for many families, it is the difference between them being completely destitute and having at least a meal for a few more weeks. But coming to the tax relief measures, first of all, again, let me go through each one of them in turn. But before I do that, let me also say very clearly and unapologetically that these relief measures are for businesses who are tax compliant. And so what do we mean by tax compliant? Firstly, you ought to be registered for those taxes for which you are required in law to be registered, which means if you are a business, you need to register for income tax. If you're trading, you need to register for VAT. If you're an employer, you register for pay as you earn. And when you are registered for these, that's the first step of compliance. The second stage of compliance is you must be up to date with all your filings. If you have any unsubmitted declarations or submissions, in the case, for example, of businesses, they supply us with a monthly VAT return. They supply us with a monthly pay-as-you-earn return. If you have any of these outstanding, you are not tax compliant. So you need to be up to date with your filing. And the third level of compliance is you must be up to date with your payments. And to the extent that you are not up to date with your payments, you must have entered into a deferred payment arrangement with SARS already. So that is the first important message to anyone who is listening and considering these relief measures. Going through each of them quickly, the first, which is the ETI, the Employment Tax Incentive, it is something that has been in law, and already they are qualifying individuals. And how it works is the companies are allowed to make certain deductions for employees for up to 24 months in whom they invest in any development and training expenditure. What this relief measure does, for all of those who qualify in terms of the current ETI legislation, whatever the amount they get, the government is allowing a further 750 rand to be added to that. Then those who are outside of the qualifying but still employed and earning less than 6,500 rand a month, which, by the way, is the salary or allowance limit, the relief goes beyond the current age limit of 29 and the current period of 2 years. So every employee who is earning less than 6,500 and who is currently obviously in employment will get 750 on top of what they're already getting. So if you're getting nothing, you'll get 750. If you're getting up to 500, you'll get 1,250, and so on and so forth. That's the ETI. The second measure is for pay as you earn. Again, every month an employer must file what is known as an EMP 201. That is the amount of money that they will deduct for that month from the payroll of every and linked to every individual employee. That money is then payable to SARS on the 7th of the subsequent month. So monies for the August payroll will be paid in September. This time the deferment is for 35% of that money can be deferred for 3 months. In other words, your August, September and October amounts, which are payable in September, October and November, you can retain up to 35% of that, provided you are again a qualifying business, fully tax compliant, and have turnover of less than 100 million. Then that amount you need to repay for 4 months subsequently, in other words, from December to March the following year. So December 2021 through to March 2022. The third relief measure is on excise on alcohol. So here there's no turnover limit. Any company qualifies, but the criteria is, again, you need to apply for up to 3 months and you need to be tax compliant. And then again, SARS will enter into a repayment agreement, which you then need to honor. So that in brief is the extent of the tax relief measures government have issued.
Is this just a breathing space, or do you think that overall, by the end of it, you're going to receive a lot less revenue?
Stephen, so it achieves a few things. But to your point, to use your phrase, it is a breathing space for taxpayers. But for government, for SARS, it is also a protection of the tax base. You know, once a business goes under, once they close their doors, it is hard for a business to restart. So in part, this is a relief measure to the qualifying businesses to take a little bit of cash flow pressure off them. And as I said, to be able for the business to survive, to manage some of their cash flows, but also to preserve jobs. So that's the benefit for businesses and individuals. The benefit for SARS and therefore for the fiscus is we protect the tax base from massive erosion if these businesses go out of business and are not able to come back. So some of these businesses, unfortunately, we know that was lost in the unfortunate criminal and looting that took place in the last month. We know, sadly, that some of these businesses, just even with the relief measure, may not come back. And it's a tragedy. We estimated that the tax cost for this year that will result from the looting will be close to 50 billion rand. And so South Africans must know that none of these incidences of unlawful behavior, no matter what the motive is a free call. The cost to society is inordinate, and that is a permanent erosion of tax revenue. Thankfully, we have had the best first quarter results in the last 3 years, and therefore we are still able to have enough revenue above the estimate that the minister set for us in February that can fund these relief measures so that it does not put additional burden on the fiscus. We don't have to go and borrow money for the relief measures that was announced. We will be able to fund it from the revenue performance that SARS is currently producing.
You're also giving alcohol producers a little bit of breathing space, and I realize this is always a slightly contentious issue, but I suppose if you look at the way that they pay alcohol, they pay some of their tax before they actually sell the alcohol, there's a sort of case for it.
Of course there's a case for it. Also, the challenge that many of the alcohol producers have, especially for products like beer, it has a limited shelf life. And so when you have stocks ready for sale and all of a sudden sales are prohibited by regulation, then you do run the risk of many of that products reaching the end of its shelf life, and therefore you will not recover the loss even once the restrictions have been lifted. So yes, there is the time gap between production and consumption, and I think this gives some relief to the producers, that the excise is now deferred, so it allows for some catch-up. But secondly, there will also be a reflection in additional product losses, which will obviously impact on profit performance, and therefore there will be a future cost to the fiscus. Our initial estimate is that the alcohol ban will cost our economy in lost tax revenue 5 billion rand.
Sure. Edward Kieswetter, the Commissioner at SARS, I do appreciate the time. Thank you very much indeed.